साथ दे रहे हैं हम और हमारी न्यू एज बैंकिंग सर्विसेज यूनियन बैंक ऑफ इंडिया।
Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. The Monetary Policy Committee keeps interest rates unchanged, maintains its stance as accommodative. Indian markets give up gains post the monetary policy. Benchmark indices trade flat while the currency sees some weakness. Polycab Wires has surged to a lifetime high in today's session. The stock is gaining for fifth straight day. And metal stocks remain the top laggards in the trading session. The Nifty Metals Index is the top sectoral loser. Good afternoon, Neeraj. RBI's shocker has been well digested, I believe, by the markets.
Yeah, Navneet, good afternoon to you. And I think the explanation given by the government, wherein the RBI, when the central bank said that this is a temporary pause and it's a wait and watch mode, and maybe they're waiting for the effects to show up before they take any further decisions, has been well accepted, you have to say. Because look at this initial blip that happened post the policy and then the subsequent recovery. For the banks as well, which had an even bigger blip and that corrected quite strongly, and this fall was even more sharp. They're still in the red, but have recovered quite a bit. At some point of time, we'll show the bond yields as well, and there's a big spike there in the bond yields in the session today. But even those, after hitting that 6.58, 6.59 mark, stayed around those levels. Currently also at 6.5990. So now actually trading at the lowest point of the day, but it's not been a dramatic change. Just this vertical spike that happened. Now let's wait and watch what happens during the course of the next few days. Maybe money flows into the short end, and therefore the yield curve steepens even further, and that might be disruptive, but time will tell. But very quickly, let me just look at the equity markets for the time being, and the Nifty heat map should come up on your screen for a moment. Almost even Siemens, maybe a bit more red. Not too many heavyweights losing out in the session today. GAIL, Bharti, Sun Pharma, JSW Steel. That's the set of stocks which have corrected. Nothing too dramatic otherwise. In terms of the gainers, Z's gained a bit, 6.5%. Larsen & Toubro about a couple of percentage points, and TCS and the IT pack giving support yet again. Last but not the least, the two names which matter, ICICI Bank, Reliance, the heroes of the last couple of days, continue to rise and shine. Reliance was down yesterday, up about 0.5% today. Devina, what about the broader end of the spectrum? Is the market breadth even Stevens or a bit more skewed towards the losers?
Well, there are individual pockets of interest and individual stocks which are driving the interest in the broader market space. So while the indices would have digested what the RBI policy doled out in terms of the moves on the large cap space, the mid caps also just 0.25% to 0.1% higher. This is the Nifty mid cap index, which is up 0.2%. What's doing well here is Edelweiss Financial Services, which has moved up to about 118 now. Then you've got the likes of Jubilant Life Sciences up 4% Manappuram Finance is up 2.5%. Mangalore MRPL is up about 2.5%, and Muthoot doing okay for itself. We've got HUDCO, which is down about 6%, so not looking all that great. Future Consumer down 3%, Future Retail too losing steam. Remember, this week itself, I think in the beginning of the week, both these stocks were up about 10% apiece. Ipca Labs also gives up some, and there is some stress in Canara Bank, which is down about 1.7%. Coming to the small cap space to see what's moving out there. Slightly better, Polycab takes charge out there, and this is, I think, the fifth straight day of gains, as we highlighted in the headlines. 7.5% higher on Polycab, now nudging 1100 for the stock. Tata Elxsi is up about 5.5%. Lemon Tree, Loris Labs, Sierra, the other few gainers in today's session. What's losing there is Chalet Hotels, down 3.5%. Godfrey Phillips sees some profit taking, and then you've got the likes of Arvind Fashion, which is down 1.5% as well. What else are we tracking, particularly from the futures and options space, the more liquid universe? Navneet is joining to highlight that for us. Navneet.
Thanks for that, Devina. While the event is done, but volatility still continues to be on the higher side. So that's something I think we should keep tracking. It's also the weekly options expiry day. And as we speak, of course, Nifty has recovered from the day's low. But remember, we defended that mark of 12,000. The day's low is 12,001. And we have seen a lot of put writing coming in at the 12,000 put strike as well. Build up of almost 4% seen right right now, but the premium on Nifty futures has come off, and that's the 12,000 put, which has added nearly 25 to 26 lakh shares as we speak. While on the call side, there's major addition, which is coming at 12,050 as well as the 12,100 strike. So even if you go by the premium and the activity which is taking place, what sort of range you can expect till the end of the session today, considering it is expiry, 12,000 to 12,100 remains a key level, or 12,070, 80 in terms of the premium accounting for that. That could be the level to be watched on the upside. Pull up Nifty Bank as well. That too has recovered from the lows, and right now it's just down by 0.2%. But remember, the futures has futures premium that's come off sharply from 100 points to almost 20 points for Bank Nifty futures, maybe indicating there were some intraday short positions also being taken here. In terms of individual stock futures, Tata Elxsi is the one which is doing very well. And if you look at all the variables, be it on the cash side and even on the futures side, everything's going well. Fresh long positions have been seen, and on the cash side, it's gone up on very high volumes. As you can see, the white line indicating today's volume vis-a-vis the average volume of last 20 session. The stock has also crossed its 200-day moving average. Open interest up nearly 50%. Stock at day's high. Long build-up seen. Cash-based buying also seen for Tata Elxsi. Mindtree is the other one. The stock's risen for the fourth straight day. In fact, it's up 9% so far in this week, and the futures activity indicating fresh longs after short covering was seen in yesterday's session. Indigo, short build-up, stocks down in today's session, down almost 3.5 to 4%, and this particular counter has been trading below all its key moving averages. On the fundamental side, of course, there was news where the company has cut down its capacity growth guidance for this financial year, and that's the reason why you are seeing that downtick of about 4 to 5%. Neeraj, I think the range, we'll check with our techies, but it looks like 12,000 to 12,100 is something we should watch out for today.
Yeah, we certainly should. Well, and let's talk about all of that and more with Tushar Mahajan of Centrum Broking joins us right now on the show with his thoughts. Tushar, so good having you. Thanks much for taking the time out. How is the setup looking like, Tushar, for the current series, and in light of what the central bank has done, does the opinion change a little bit on the Nifty Bank?
So I think very clearly what the setup seems to be suggesting is that most lower levels are going to get defended. So we saw 12,000 getting defended fairly well yesterday. The markets recovered almost 100 points from the day's lows, and that's what we are looking at. Having said that, the upside still probably looks around the 12,200, 300 level, because after breaking that 12,000 level, the index hasn't been able to really sustain on to a very large breakout. So I think overall I'm looking at like about 11,950 odd on the downside to about 12,300 for the series over here.
Okay.
Tushar, while Bank Nifty was something where a majority of the action was seen in the November series, it was up about 7%. If there is any sort of outperformance seen, as you're saying, Nifty target can be 12,300 for December series. Do you think once again the contribution will come in from the banking stocks?
Well, the banking stocks will definitely need to move, and for the index to move by the sheer grunt of the weightage that the banking sector has within the index. But I think what might be interesting to see in this series is that you might see some of a rotational shift within the banking names from leadership being provided by an HDFC Bank to a Kotak. I think you'll probably start seeing leadership coming in from potentially SBI, which has done well in the November series as well, and the continuing trend in ICICI Bank. So I think banking will need to, by sheer dint of its weight, banking will need to provide that impetus for the Nifty to move to that 12,300 level. But what stocks within the banking index, you'll probably see a rotation within that.
A word on FI setup as well, Tushar. We started this series where FIs were net long on index futures, but since the time the series has started, we are only seeing selling coming in from FIs on the cash side, and continuously they've been building up more shorts and unwinding their long positions on index futures. And now, as of yesterday, they were net short on index futures. So how are you reading the entire setup, considering this is the December month as well, where institutional, especially the FI activity, is not as much as compared to the other months due to holiday season?
Yeah, so I think the last 4 days of foreign selling that we've seen in the cash market, that's come as pretty much of a surprise, because I think the big trigger for the markets over the last, for most of the November series was this huge deluge of foreign money which was coming through. To my mind, I think a large part of the selling is potentially due to the fact that it is year-end, like you said, and people are probably booking profits. So if you look at on a dollar-denominated basis, India, emerging markets, or the MSCI India has been one of the best performing indices this year. So it's probably a round of profit booking which is happening by foreign investors towards as we head into the year-end. With regards to the positioning on the futures side, the quantum at this point in time is not too massive. We are still close to the neutral line rather than, the skew being excessively built on one side. We've obviously seen the trend change substantially over the last 2-3 months from a massive short position, net short position of almost about 125,000 contracts to coming down to about 45,000 contracts in the previous series, and now more to a neutral to a slightly negative stance. So I think at this point in time, we are just looking at an unwinding of that positional trade, which was in sync with the selling that you're seeing in the cash market. And we'll probably keep watching out for the trend on which side this begins to swing in a greater fashion.
Good afternoon, Tushar. According to the readings that you have in terms of data points in the derivative space that you analyze, which sector, according to you, is a laggard? Which pocket seems to be missing out on all the action?
On the frontline names?
Yes.
I think one clear sector, one sector which seems to be really volatile at this point in time, and you can't really say which has performed in this rally, is clearly industrial. So you've not seen L&T kind of perform in sync with this weightage. I think the other two laggards probably at this point in time look to be metals and auto space. So autos have had a run up in September, October, post the tax cuts, and for most of November, and even now you're not seeing too much action. That sector is kind of languishing, and the commodity sector, while it's up, the metals are up from the lows which we saw earlier, but in terms of participation or sheer contribution to the index, that's also being lagging. But I think among the really large cap names where the performance seems to be most disappointing, that is the likes of an L&T.
Do you feel that there could be further selling pressure here? I mean, while it's struggling, just hovering around 1300, it's been some time now that it's come off its peaks of 1600.
That's right, and it looks like just by sheer impact of the fact that yesterday's headline saying that there could be payments stopped and review of projects in a state like Maharashtra, those things don't give too much confidence to the investors per se. So my sense is that given the overall state of government finances, given the kind of slowdown that we are looking at, there could be some time before the stock moves up. From 1300, whether it goes down to 1100, there's also a value play over there, and so to say, the only proxy for the India growth story. So I don't know whether it goes to 1100, but I clearly don't see this stock going back to 1500 levels in any short period of time or in a quick run up at all.
It was down 10% in the month of November. In the last few days, L&T continues to witness fresh shots. Some rebound definitely seen in today's session. Tushar, what's the sense you're getting on IT? Nifty IT was a laggard last series, so it did underperform your banking index. It underperformed Nifty as well. But in the last 3 to 4 days, we are seeing participation coming back from heavyweights like TCS, Infosys, even your mid-cap IT companies like Tata, Elxsi, Mindtree have been active. Would you take a bet here? Do you have any favorites for the December series in this pack?
So I think we went long on the likes of a TCS and Infosys about 2-3 days back, because it just the stocks were rebounding off fairly strong support levels, and those are levels which the stocks have tested they've tested significantly well in the past as well. So around 2020-30, it seemed like TCS was set for a rebound. Similarly, around the 670, 675 odd levels, Infosys seemed like a good set for a rebound. And I think that's what we are seeing at this point in time. To my mind, the rebound that you're seeing in the IT stocks is more, just short covering and people playing the range. It's not that the stocks are going to kind of run away and give another 10% from the current levels.
Tushar, one space that is being top of mind.
Rebound on the range play.
Yeah, sorry. Okay, I didn't know you were finishing your point, but okay, more a rebound of a range play. But one final question, Tushar, and that has to be on telecom, simply because the pocket has been so active. If one is not looking at necessarily just the next few days, but a positional trade, does Bharti, or if you've not spoken on Reliance than that, but more essentially Bharti, does it give you a chance to create that position?
Sorry, will Bharti give you a chance? You're saying, will that correct?
No, to create a positional long, not necessarily just the next 5-10 days.
Yes, I would tend to think so. I think the news flow around the sector continues to be positive, and we don't see worries that this could change anytime in the near future. We've seen the fundraise announcement coming from Bharti as well, so the stock's a bit under pressure because of that today, but beyond that. But to your question, whether at this price also would you want to create a positional long, my answer would clearly be yes, because just the sheer dynamic of the market that it operates is changing significantly.
All right.
And the stocks are not that expensive yet.
All right, Tushar, we leave it at that. Thank you very much, as always, for coming on board and sharing your thoughts with us.
Thank you.
All right, the market seems to have stabilized, but the Monetary Policy Committee surprised the street today by keeping key interest rates unchanged. Well, what has the impact in the past been with regards to how the transmission has shaped up, particularly for housing finance companies? We'll discuss all of this and more, including business prospects, with Girish Kauski of CanFin Homes, who's joining us right now in our studios. Thanks very much, Girish, for taking out the time and speaking with us. Let's talk about what's been happening. 135 basis points that the RBI has already cut so far. Transmission, according to the RBI, is picking up. For a housing finance company such as yourself, what were the expectations, and how do you see business dynamics changing on the back of the fact that policy is not changed this time?
In terms of cost of funds, last 3 months it's actually come down. So if you talk about transmission of interest rate benefit, at least to HFCs, I could very clearly see last 3-4 months, our incremental cost of borrowing has come down. So to that extent, yes. Is it sufficient? I think that's a question to be answered, but definitely yes, it's coming down.
What is the differential? Can you tell me how much it's come down? From what?
So approximately about 15 to 20 bips it's come down.
Okay.
Yeah, so I think that's a big plus for the industry. Well, on the demand side, of course, there has been some challenge on the developer side. However, individual housing, this demand is pretty strong. So since we operate in that space, we are not really that impacted, because of stress in the developer side.
Do you expect cost of funds to come down further for yourself?
I think eventually it should in next 3 to 4 quarters as such, because if you look at any industry for that matter, let's talk about housing, it's not really come back. If you see how it was before IL&FS and how it is now, if you want to get to a situation where it was pre-IL&FS or maybe pre-Diwan, I think a lot more needs to be done, not just the drop in interest rate. Of course, next 3 to 4 quarters, I feel the rates are going to be stable, or there could be slight drop from the current levels as well.
But transmission being spoken about in a big way, so even if the RBI maintains status quo or cuts rates by, say, 25 basis points post-budget, if the fiscal situation doesn't worsen too much or otherwise, you reckon that net-net, the borrowing costs for the lenders as well as the cost for you as a company, and therefore the pass on, would come off a bit?
If you look at the current situation, there's a lot of liquidity
in the system.
Yeah, in system. So banks are flush with funds. The challenge on the other side is that not too many HFCs and NBFCs to lend to. And therefore, I think maybe top HFCs and NBFCs, they would get this advantage of cost because they're flushed with funds. Else, it could have been a different story altogether. So, given the current market situation, I feel that some more cost benefit would be passed on to at least HFCs and NBFCs.
And would that result in a pickup in business? Now, just trying to understand from you, since the time ILNF has happened and post that, has there been a marked change in business sentiment versus 12 months ago in the last 3 months? And do you expect that to improve over the course of the next, say, couple of quarters?
If you ask me, since last 4 to 5 months time, there has been slight positivity in the market in terms of non-developer segment, which is a large piece for us. So when I talk about non-developer, I'm talking about self-construction, I'm talking about composite loan and independent house, which is basically resale. This constitutes 75% of a portfolio for us. Here we see demand still intact. Of course, it was not that great about 4 to 5 months back. Now we started, we have seen this demand picking up in this segment. So may not be in big cities, at least in tier 2, 3 and 4 cities, there's a lot of demand for this. With the rate of interest further going down, maybe it could help demand to further go up. But I'm not very sure on the developer side because rate cut alone may not help.
So Mr. Kosgi, you're saying the LAP portion you're not sure about?
No, I'm not talking about LAP. I'm talking about home loan. If I can segregate between developer, when I talk about developer funding apartments, because there is slowdown there. A lot of projects are stuck, it's not complete, and the new projects have stopped. And therefore, you can see some stress there. So nothing is actually moving there.
You're basically talking direct B2C, means the customer is actually going to use that house and he's ready to invest in making that house, that kind of thing.
Yeah, non-developer segment, which is more to do with plot and independent construction. Okay. There we are seeing a lot of demand coming in. So because there is stress in developer segment, just drop in rates may not help. What actually is required is that there has to be flow of credit to developers for them to complete the projects and come with new projects. If that doesn't kick in, only dropping rates may not help that segment because for most of the HFC that's a large segment since they are present in top cities.
Okay. Despite of however the credit growth in the system has been for the past few months, you guys have still managed to put up a decent show. How are the disbursements so far been in the December quarter vis-a-vis the last quarter for you all? And have the inquiries been better than what it was? Because the sentiment on ground has been dented actually.
If you look at last 2 years, we were a little cautious, especially after what happened in the space. Now we are seeing demand coming back, and even we could see our numbers really inching up. So we feel that next 4 to 6 quarters or so, there's good opportunity for at least top 5-6 HFCs to try and grow their book without changing their risk profile. Having said this, all this is outside the developer segment. So we see some kind of demand coming in, and we've seen our own numbers that sanctions have actually gone up, disbursements have gone up. I think in next 2-3 quarters time, this would actually go up.
And the focus will remain on tier 2, tier 3 cities for you all?
For CanFin, you're asking?
Yes.
Yeah, our focus is going to be tier 2, tier 3 and tier 4. In large cities, we focus not within the city, in the outskirts, because our play is in affordable housing. Our ticket size is about 18 lakhs. We would like to keep it that way, maybe a lakh more or less. So in that space, we don't see too much of stress and also too much of competition now, since number of lenders have come down because many have stopped, and a lot of people have at least stopped home and they're continuing with non-home. So since number of lenders have come down, market has shrunk. Even though market has shrunk, it's big enough for few players to still show reasonable growth for next few quarters.
So affordable housing segment per se has not seen any major slowdown compared to the other spaces in the recent past?
It has seen slowdown, but the slowdown has been much lesser compared.
Okay.
And of course, there's a lot of thrust now from central government,
yes.
Both RBI and NHB. In terms of recently, Ministry of Housing and Urban Affairs, they launched CLAP under PMAY. So there's a lot of focus. So I'm sure this segment is going to pick up. But yes, it's a question of time, for us to see the old glory of housing industry.
So, while there have been a lot of talks, and obviously the government has come up with that special window for developers to kickstart stalled projects and things like that, do you see the demand matching up to the excess inventory that will come on stream once these stuck projects are actually completed? And also, so far, post-Stalin FS, and we've been talking about how affordable housing as a space has not been a problem. Let's talk about the demand on this slightly the higher segment market.
Demand is yet to pick up in the higher segment, and the special allocation of funds for developers for certain projects subject to various conditions. I think one will have to see as to how many projects would qualify and how that would translate into demand picking up. I think that is yet to be seen. Intent is good. There has been some kind of demonstration of commitment. We need to see how it's going to be executed.
What do you expect the industry to grow at this upcoming year?
Next year or so, industry should grow at about 10-11%.
But you would do 20% AUM growth?
We would do far higher than industry growth rate.
Okay, and would this happen at higher NIMs as well? The reason I'm asking is because almost everybody seems to believe that the cost of deposits will come off. The cost of lending may not necessarily do that.
I think regardless of that, we are very keen on growth, keeping profitability and asset quality in mind. And therefore, there will be constant effort to try and expand spread and increase NIM. Though the increase may not be substantial quarter on quarter, but however, you will see a few bips going up quarter on quarter, because that's our focus.
So as a year at large, would we see a meaningful expansion in net interest margins from where we are sitting right now to 12 months out?
So probably if you call 10 to 12% as reasonable in increase in NIMs, yes.
Every quarter? No.
Not every quarter, in a year's time. In a year's time, I would be very glad if it can happen every quarter. So I'm saying in next 4 quarters, if you can expect maybe 7 to 8 bips quarter on quarter, cumulatively about 30
Sense
to 40.
on credit cost and asset quality as well?
If you ask me honestly, our asset quality is pretty, well comparable in the industry. But however, there's a lot of focus now to bring in more efficiency, try to fast track. So I think especially last 1 year, there were challenges, more to do with external, in terms of trying to initiate SARFAESI and disperse the property. I think that issue is now behind us. So hopefully we expect that, this year we'll be able to try and sell our properties much faster, and that should see NPAs either being stable or maybe slightly coming down.
Do you, in your wisdom, foresee any large developer or a large lender to multiple developers under a bit of stress having liquidity issues which might lead to not necessarily a default but a near default situation?
I would not be able to comment on that since we don't operate in that segment. If you look at our entire portfolio, 75% is non-developer, and 25% is basically where we have given for flats.
You will be talking to your peers.
And this generally would be in the low-rise projects. Yeah.
No, I just thought, not your portfolio, but maybe you hear it from the markets. Has situation improved, or could there still be some things that people need to be mindful of?
See, definitely there is pain, and this pain is not going to go away so easily. This will be there for next 6 to 8 quarters. Having said that, there are a lot of efforts being made, by the entire system to try and come out of the situation. Hopefully that should ease out, but it's a question of time. It takes time. It's not going to happen in near future, is what I feel.
All right, I just have one question, and my final question is, with regards to geographic concentration, do you have any particular geography that's really, adding those numbers for you and that you really want to focus on in a big way, or you're just going to be spreading across?
No, we are very, very particular about choosing a geography. When we choose a geography, we look at 2 things. One, is that geography safe for doing business, the kind of business what we want to do? Number 2, is there a growth opportunity? Only if there is a tick mark against these 2, we are going to open that. So we are very, very choosy about which, not just geography, within a city, in which pocket we need to open. Because when we open a branch, we should be quite clear that literally there is no competition there, at least for next few months or a year or so, because we don't compete with banks, and if you have 3-4 branches in that pocket, and we would be there till such time we feel that it's sustainable. Beyond that, we would shift our branch to a different location.
So which is your stronghold now?
South, I guess, right? Yeah. South.
Picking geographies and pockets very diligently, and making those swift changes in terms of consolidation and moving branch from one pocket to the other pocket. I think
but
this
doesn't
is
that
an ongoing story.
become a very centric approach, and all the eggs in one basket sort of a thing?
This is just one strategy. Like this, there are multiple strategies. We focus on certain segments, certain profile, certain geographies, within geographies, certain pockets. So we just spoke about just one. So we have multiple things. Even if 1 or 2 doesn't work out, there are 4-5 others which could actually pull it off. So
And majority of the loan you disburse is to salaried class.
Today, if you look at our mix, salaried is 70%,
Yeah.
ACNP is about 30%. Yes, that's how we want to keep it. Yeah, this mix may slightly change when we want to grow further, but not drastically, maybe 3-4% here and there.
Okay, we'll leave it at that, Mr. Kausgi. Thanks so much for taking the time out and speaking to us.
Thank you.
Appreciate your time and all the best.
Thank you.
That's CanFin Homes expressing optimism about how the outlook ahead could be like over the course of the next 12 months. Some improvement in net interest margins as well, pencil in, but overall a bit of confidence. Just marking the markets a bit before we move to our guests. Stocks which have inched up a bit in the last few minutes of trade include a Navkar Corp, a JK Tyre, both of which have just inched marginally higher. Johnson Hitachi, though the volumes are suspect there, but that too has perked up a little bit in trade. And if you look at the Nifty 50, I think Z Entertainment has moved from strength to strength. Very strong moves in the last couple of hours of trade, and currently trading nearly at the day's highs. Let's get in our experts to talk about how are they approaching trade. Arun Kumar of Reliance Securities with us, as is Amar Singh of Angel Broking. Gentlemen, both of you, good afternoon. Thanks for joining in. Amar, how are you approaching trade today, particularly on the Nifty Bank?
Yeah, I would say that Nifty Bank, we are seeing some selling pressure post the RBI policy, and higher levels are definitely being sold into, because till the time we don't see Nifty Bank sustaining above 30, Nifty Bank futures, December futures sustaining above 32,200 levels, I would say that there could be some selling pressure. However, on the downside, it has got very strong support coming at around 31,600 odd levels. And if you look at it technically, I would say that today we are seeing one of the indicators moving into negative territory. So if that happens, that means that higher levels definitely now would act as pressure for Bank Nifty, which, as I mentioned, was 32,200 levels.
Okay. Arun, what's your sense today on the index? Are you taking a trade on either of the two indices?
Definitely no directional trade as far as a fresh trade is concerned, because both of them are non-trending. What has happened is over the last few days, last 3-4 days, we saw correction, and yesterday we saw a good jump. Both the indices displayed signs of reversal. However, today as the day progressed, we are seeing the action is a little bit mixed. So what we are expecting is, we are expecting a consolidation with positive bias for both these indices. Should we take a fresh trade on the indices? Not on the indices, but very stock specific.
Okay, so what are those stocks then?
The first stock which we like is ITC. This stock has been trading it has been falling quite recently, and yesterday and today's action, it has formed a bullish morning star pattern, and there is a positive divergence on the Williams percentage R. So what we feel is this stock has got good potential to rally towards 258 to 262 over the next few trading sessions, and one has to keep a stop loss around 241 for this particular trade. Setups are good. It's a very early trade. Also, there is one more interesting thing. It is not a classical double bottom, but it is very close to a classical double bottom formation, which we are seeing over here.
Okay, those are some individual stock ideas coming in from Arun. Amar, what about you? Which are the stocks that you're betting on this afternoon?
Yeah, the first one is Muthoot Finance. This is one stock, if we look at it on the long-term charts as well as the intermediate-term trend, clearly shows that there is strength in the stock, and the stock today is also up by 3%. However, what we are seeing on the daily charts is that the stock has been consolidating, but still it seems to have formed a very strong base. So this is one stock one can definitely look at buying. So currently it's around 693 odd levels. So any pullback towards 675, 685 zone, that ideally could be a very good level to buy, with a stop loss of 657 and a target of 727 on the upside. And the second stock to look at is from the pharma space, and that is Sun Pharma. What we are seeing here in Sun Pharma is that Sun Pharma has been trading, I would say, flat for the last couple of days, but on other longer term time frames, it seems to be positive, and it appears to be positive, and the trend is also up. So currently it's around 436 odd levels. So at current levels, 435, 436, one can initiate a long position with a stop loss of 423 on the downside and a target of 455.
Okay, so those are some individual stock ideas coming your way. Sun Pharma is right now, however, sitting with some bit of cuts. But remember, the gold financing companies, as mentioned by Amar, both Manappuram as well as Muthoot, are rallying in today's trade. Muthoot is up 3%, Manappuram also seeing good gains, and both of them have been trading very close to their 52-week high as well. On that note, let's bring in our fundamental guest on board. Gurmeet Chadha of Complete Circle Consultants joins us on the show. Hi, Gurmeet. Good afternoon. Well, a shock. Okay, I think we'll connect with Gurmeet in a while, but just wanted to pull up Tata Elxsi, a stock that we highlighted in our F&O check as well. It's going from strength to strength right now, sitting with gains of about 6%. Remember, we highlighted the variables from both the F&O as well as the cash market have been looking good. It's up on good amount of volumes. As you can see, nearly 40 lakh shares have been traded there. Also, remember, yesterday Tata Motors saw gains about 6 to 7%. I think, is Gurmeet back with us? We can go across to him and take his view on certain stocks. Gurmeet, hi, good afternoon. Hope you can hear me now. A shocker from RBI has been well digested, though Bank Nifty right now is seeing some bit of gyration, and not to forget, trading action will continue to play out. It's also the expiry day, but some individual stocks I wanted your thoughts on. First one being Tata Elxsi. Yesterday Tata Motors was up, and we know Tata Elxsi's main segment, transportation, derives majority of its revenues from JLR. The first quarter of this financial year was not great for them, but I guess there was some recovery seen in the September quarter. If you've been tracking this stock and this company, what are your thoughts? Can we expect revival coming by in the second half, because the stock's been gaining?
I think the risk reward looks interesting, Navneet. And if you see, you're right, 45% of the revenue, as per some of the reports, comes from JLR. And I think if you see the trend even in Tata Motors, I think we're seeing some uptick there. So I think maybe you have to enter with a slightly more longer term outlook here. Since the dependency on automobile as a sector is high. My own feeling is that the worst is over. So you should gradually see some recovery coming in. But for investors with moderate risk reward trade-off, I think Infosys still offers a better play. Still available at post the whistleblower complaints at far lesser valuations. I was seeing their account mining data. They're doing pretty well. The TCV of the large transactions has gone up by almost 77%. So that deal focus is there. I've been also interacting with their, some of my clients are in some of these IT companies, in terms of they have this deal specific teams which they have made, where they are working on a lot of upcoming themes. So for example, in utilities, it is the modernization theme. In wealth management, in BFSI in particular, they are working on few deals and making customized softwares and contracts. So there's a lot of work incrementally happening in terms of getting fresh deals in, and that gives me a lot of confidence. If you see the EBITDA as a discount to TCS is probably at a multi-quarter low. So from a moderate risk reward, probably Infi fits the bill better rather than taking a high risk, high reward kind of a bet, which is Tata Elxsi. But it is definitely looking attractive from a long term perspective.
All right, the stock's up about 6% right now at 856. What's also doing well in today's session is Repro and Polycab. Both of these stocks are up and about, and Polycab's been up for 5 straight days in a row. Repro itself has been up for 3 straight days in a row. 723, Polycab at 1,047. Though it's come off the highs of the day, I think it had nudged about 1,090. Gurmeet, any of these two businesses that you track?
I do, but our pick is more Havels, which is more diversified over Polycab. Obviously, Polycab has done well in terms of last 1 year, returns post the IPO. My view is that gradually we will see recovery in, and Havels is a more diversified play. You get lighting, you get you get consumer durables. The Lloyd acquisition, I think, is taking time, is a bit of a drag in terms of both bottom line and top line. There is serious competition there. Wires and switchgears, they continue to do well, while Polycab is clearly the leader there. But that's a more diversified play. Plus, they have products for the, it's a very cyclical business. The Havels is diversifying into, while right now the air purification, water purification is a very small part, but the product portfolio is far more wider. It's give you a better play in terms of fast-moving electrical goods. The stock has underperformed. It's been hovering around 650, 670. And that consolidation is actually good. So once the cycle turns and you see the some pickup in economic activity, this is one of the counters which will possibly see a far bigger upside coming its way.
Okay, that is Havels that Gurmeet prefers over Polycab, more diversified business. 670 on Havels, not doing a whole lot much in today's session though, down 0.25%. Let's talk about a few other stocks which are moving. And since we were on the topic of Repro and how it's moved over the last 2 or 3 days, Amar Singh, do you track this one, Repro?
No, I don't track this, but since you mentioned, I've looked it up, and what I can see technically on the charts is that the stock continues to be very strong on the intermediate term trend, and also the high which it had made in first week of November, that has been taken out of 699. And going back from a long term perspective, what we see here is that it had made a high of 750 in September 2018, and again today's high was around 742. So, and prior to that it had made a high of 775 in June quarter. So effectively it means is that on the upside 750 should act as an immediate level of resistance, but the trend definitely remains extremely strong. If it breaches 770, then it has all the potential to rally towards 800 mark in the short term.
Let's wait and watch if that happens. Some other stocks which are hitting highs, and Gurmeet, I want to come to you fundamentally on a mass financial at 760, up about 6% in trade. We're talking about NBFCs doing well. We were just talking to CanFin Homes, but this one is doing things slightly differently and is getting rewarded for it.
Neeraj, also from a valuation perspective, there were a lot of clouds over Max for almost a year. I think from a valuation perspective also there are some some value buying happening. And Max gives you a more, it gives you a play on life, non-life, a lot of other streams. I would still, however, we continue to be positive on HDFC Life. I've been doing a lot of channel checks, Dheeraj, and while the numbers are there for everybody to see, if you see, it's a clear leader in BNB, both in terms of the BNB business for the first half. If you see, has grown almost 57%. Their margins are up almost 320 basis points. Their average ticket size, courtesy the Sanchay Plus plan, is finding a lot of traction amongst HNIs, including some big tickets there. So they are not only moving in terms of number of lives being insured, they're already now touching 3 crore lives, which is a staggering number. Their average ticket size is picking up quite well. The 13-month persistency ratio is 90%, again one of the best. Even the 60th month persistency ratio, is about touching close to 60 now, which again is the industry leader there. They tie up with, and the dependency on HDFC and the banker tie-ups have reduced considerably. I was doing some data mining, and they have done some 30 lakh policies through Airtel and about 7 lakh policies through Paytm. So their ability to grow both numbers, average ticket size, the product mix is shaping up well. The embedded value for H1 now is above 20,000 crores. So that I agree it's 4.5 times embedded value, but I see that value growing, continuing to grow at a very, very high pace. So, I think it's a long-term opportunity where, you could still see 4-5x with a 5-6 year horizon. So stick with HDFC. It's corrected from 630, 640 levels to 570, 580. Usually HDFC stocks don't give you more than 10-15% entry points. Better to latch on to it right now.
Would you apply the same logic for HDFC AMC?
Neeraj, a bit. So HDFC AMC, considering the run up at 3,200, despite I think 13-14% correction, is still expensive. I'll still give you the breakup why it may. I'm still positive on it. May not be in terms of as incremental as a return in life. If you look at it, out of all the industry folios, 25% are with HDFC. If you see its AUM breakup, 1,65,000 crores is equity, right? Of which active managed, almost everything is actively managed funds. Equity AUM continues to grow at 12%. And as I said, we are just scratching the surface here. The industry will continue to probably double every 2-3 years. And with innovations like bond ETFs, more products coming on the passive side, the AUMs are only going to multiply. But point taken on the price point, considering the run-up, from an immediate near-term perspective, it may not give you, as much as a gain, but continue to, hold on to it. May not incrementally add right now at this price, but if it falls a little further, I don't mind adding, again, a very, very structural theme for a very, very long term.
Okay, Amar Singh, I want to come to you on Godrej Properties. A very sideways move now since the last couple of days, but it is still holding steady above its 200-day moving average. Now you've seen it come off a bit, just another 0.5% given up on Godrej Properties. But what's the gauge here in terms of what the stock is doing right now? Fell off, its highs, but now absolutely flat, consolidating for the last couple of sessions.
Yeah, you are correct. See, what is happening in Godrej Properties, if you look at the weekly charts, clearly shows that there is inherent weakness in this stock. And technically, one of the indicators clearly show that any pullback towards 950, 920, 25 zone would be used as a shorting opportunity, whereas those who are long, they would look at booking profits. Because till the time we don't see it breaching the 920, 25 zone, we could witness selling pressure in the stock. And on the downside, somewhere around 870, 850, that's a zone of support for the stock. But I would say that there is weakness, definitely weakness in this stock right now.
Okay, since we are on Godrej Properties, Godrej Consumers, that stock's also been weak, not just today. I think it's been falling for last 3 sessions. It's a day's low, down 3%. I think this week itself with the fall, it's fallen below its 50-day moving average. Arun, come in here with regard to Godrej Consumer, the selling pressure that has come in the recent past. Would you take a bet on the downside?
Godrej, sorry, I couldn't get it. Can you please repeat?
Sure, it's Godrej Consumer.
Godrej Consumer.
Yes. Arun, while you look at the charts.
Yeah.
Okay, go ahead.
Yeah, I can hear you. See, the setup is quite bad, and the MACD of this stock is still in sell. What we feel is the downside can be more. Probably it can drop by easily by another 10 or 15%. Probably somewhere close to. We are looking at somewhere close to 600 or 610 zone for this particular stock. Volumes have been increasing on the sell side, whereas on the uptick, the volumes have been gradually, it has been reducing. So there's hardly any buying interest even at these levels. So there's a good probability that it can slide further.
We'll have to wait and watch, but at least for the week, the counter has been pretty weak. It's down 6%. Pull up CSB Bank as well, new kid on the block, which listed yesterday, and it did have a stellar listing. And today it's witnessing muted session, still trading just sub that mark of 300 to 97. Gurmeet, we've seen a good participation coming in the primary market in the recent IPOs, be it CSB, Ujjivan Small Finance Bank got a good response, subscribed nearly 170 times, and of course IRCTC, which has been a clear winner so far this year. Among all these newly listed companies, of course, Jeevan Small Finance Bank is yet to be listed. Is there anything you've been watching closely and you think the growth prospects in the near term could be good for these companies?
Looks difficult. In fact, I'm a little worried at the way, the retail money, there's a lot of IPO financing, leveraging going on. And, and everybody thinks that IPOs carry no risk and we see 100, 200 times subscription, it gets me a little worried. But, coming to, the specific stocks you mentioned, I think IRCTC, if you were to take a, very long-term view, maybe not at the current price, I think is a much better play. I think, and I think what it is right now also getting is the number of hits it gets, so it's a far bigger play than, pure catering and water and other services. It's a much broader play which can evolve into with the kind of hits and the number of transactions that happens on the site and the fact that volumes are only going to go up, and it's a virtual monopoly. But at the current price, may not make much sense to add. In fact, instead of looking at some of these newly listed, tier 2 banks, there are a lot of good tier 2 banks which are available, at a far better valuations and offer a far better risk-reward trade-off. The perception risk seems to be higher than the actual balance sheet risk. Something like a City Union Bank, steady performer, Tamil Nadu-based, largely South-based bank. The return on assets for last 10 years hasn't gone below 1.5%. The NIMs are in the range of what good leading private sector banks are, which is around 4-ish. Great bank, to be in over the long run. Something like a DCB, it's done with the branch expansion. 24,000 crores loan book. 70% of it is, less than 3 crores, makes it pretty granular. Some of the better run NBFCs, something like a Chola, which is a Murugappa group. 70% of the book is vehicle finance, of which again 25% is LCV, and the other 30% is SME and home equity. Good return ratios. Last quarter had a bit of an impact due to the tax, deferment of almost 80 crores. That will come back from starting Q3 as effective rates comes down. So I'm saying there are better plays which you can take a more long-term view. The prices are reasonable. They are right now available, cheap because of the NBFC and the trust issues we have had. Those are better plays from a long-term perspective.
Okay. All right, Edelweiss also for itself in the last few trading sessions has not done all that badly. If in fact we pull up the last 7 trading sessions for Edelweiss, it's been a decent period of gains, at least in the last 2 trading sessions where the stock has moved up from the lows. 7 days, however, it's still down about 3.5%. But Edelweiss has been fluctuating quite a bit, Arun. Do you track this one at 117, 118, though it's now looking a bit more toppish considering where it's come from, which is levels of about 70? Do you feel that there could be some more added pressure at these levels?
Yes. See, I'm just looking at the stock. The thing is, the way it has been moving, the rise especially, it is not garnering enough buying interest. So in all probabilities, what I feel is somewhere close to, it can rally towards 126 to maybe around 135 zone, where it can meet some kind of a pressure, selling pressure. So that is the maximum. I think if someone is long, probably they can they should look to exit somewhere over there, around those levels.
Okay, L&T now for today's session is doing okay for itself. So 1303 is where L&T is currently at, not at the high point of the day, but after that few days where it's done absolutely nothing, this is a welcome move on the stock. 1303 is where it's trading at. Amar Singh, I don't know if you've already spoken about L&T, but what would the trade look like? Amar Singh? All right, I don't think Amar can hear me. Arun, L&T?
Yeah, I'm liking L&T. In fact, it has almost made a double bottom, multiple bottoms. I should say it's resting at multiple bottoms. And if yesterday's low of 1,282 is held, in all probabilities, we can see a smart rise at least till about 1,375 to 1,410. There is a fairly decent scope. Yesterday the volumes were quite good. Even today the volumes are quite good. It's a contrarian call, basically. It's a contra buy call around these levels.
Okay. Well, the markets have just pulled back quite a bit now, about 280 points for the Nifty Bank, as we said, and trading at the lowest point of the day, the banks in particular. But some of the stronger hands, Bharti Airtel, for example, is trading at the lowest point of the day. There is weakness in GAIL today, despite the news flow about how natural gas might come out of the ambit of GST, but these stocks have come off today. So that's the other pack that you need to monitor. And commodities, the last 2 or 3 days, JSW Steel in particular, except for that flurry of activity in trade yesterday, these stocks have largely been, in the last 3 sessions, weak as opposed to strong. So do watch out for some of those names as well. And then at the broader end of the spectrum, names like Shalimar Paints, etc., are also looking slightly weak. Gurmeet Chadda, just wondering, you have some very strong opinion on the kind of bond portfolios that people can create. At the current point of time, with what the Reserve Bank of India has done, is there a debt mutual fund scheme that you believe people can park money in if the view is not necessarily only of the next 6 to 12 months, but of the next 2 or 3 years?
Neeraj, actually 2 plays here. I think if you look at the shorter end of the yield curve, which today even RBI governor highlighted, I think the transmission has been there. Obviously, the money market, the CP rates are now sub 6%. If you see 3-month CPs and CDs, the 2-year AAA is now about 650. So anybody who would have taken a short-term debt fund, and we had that discussion, would have made double-digit return. I think, but the longer end, which is, and it's not really longer end, it's medium to longer end, which is, let's say 7 to 10 years, the yields are still elevated, which is about 760 to 780. So if one were to construct a AAA portfolio with, let's say, an average maturity of 7 to 10 years, I think not only you get a running yield, which is 760, 770, which is 250 bips over the repo rate. So it gives you a compression play. And there are certain funds which will play duration, and there are certain funds which have a rundown maturity, which means the portfolio maturity will keep coming down. So somebody who wants to do a long-term debt right now and just forget about it can pick up something like an L&T AAA's fund, which is a rundown maturity fund. There are a couple of dynamic bond funds of IDFC and others which run similar maturities, and you can lock in a post-expense yield of roughly about 730 to 750, and then maybe some potential appreciation in between, and then take a call whether you want to stay the course or is it after 3 months. So that to me is a good play. Anything around 7.5-8% in debt, low risk, and if you are in a rundown maturity, technically there is no interest rate risk if you hold the maturity. The other is if you can also mix a bit of credit. I mean, I'm not saying go for a aggressive credit risk funds. We saw Edelweiss raising money at 10 quarter for 3 years. So if you can make a portfolio which is 60-40 or 70-30, and some of the better names, some of the better AA names along with your regular PSUs in a ratio of, let's say, 65-35, 70-30, something like a Shriram, an L&T Finance, a Tata Capital, some of the better rated ones, because they're still raising money at 9-10, that gives you a YTM of maybe 8.5-9% at a consolidated basis. So these are the 2 things you can look at and still deliver 8-9%. And considering indexes at what levels they are, 8 to 9% returns in debt are not bad.
Okay, stay on, Jaman. Let's hear out one more voice. Andrew Holland of Avendus says that there won't be high conviction in mid-cap and small caps until the economy starts picking up. Earlier today, Holland also said that the market looks forward to how the government can get the demand side going as India closes in on the budget. Here into a slice of the conversation.
If we have the tariff deal, what will happen is that everyone will say global growth will pick up. That's good for emerging market. Emerging market flows will come, and India's weightage will mean that we'll get flows as well. So that will help push our markets. And then in the run-up to the budget, I think we're going to have lots of expectations in terms of how the government can get the demand side going, and therefore tax cuts. So I think the markets or the Nifty will probably, between now and then, we'll get to that 12,500 level.
Just to that point that you mentioned about India's weightage, I think in the MSCI World Index, it's closer to about 9%.
Yes, exactly.
The last time we checked, there was not a material dip in terms of the foreign holding with regards to that weightage. They were somewhere around 8.5. So they were pretty much at par to what the weightage stands at. So do you see them going overboard and giving a premium to India then, because they're already at weightage?
No, I don't think we're going to get a premium. I think so as flows come into emerging markets, obviously there's other emerging markets out there which are more export kind of led in terms of their growth, and their PE is a lot cheaper than India. So we will just get flows. I don't think we're going to get a disproportionate amount of flow. We'll just get our weightage.
Okay, you're painting almost a very simple picture about how the entire piece will move one by one into leading up to the budget. The one question that could come in, and there's a chart that is now floating around on the Bloomberg Global Network about the Sensex PE, and I know we don't look backward, we should look forward, but just a small look backward suggests that we are at astronomical valuations for the Sensex. The question is, do you think growth will come back in such a way that it will make these valuations look a lot more reasonable?
No, so what's good, what you're talking about the 10 stocks, I look at Nifty more than Sensex, but basically the PE of the Nifty is what, 18, 19. The broader market below those is cheap, it's 10, 11 times. But what's going to get investors buying into that? It's really when the domestic economy starts to pick up fully, right? And we're at least 2 quarters away from that. So I think everyone's going to stick to quality. And I was meeting some of the leading companies over the last few days at the conference. They're still doing well. Okay. It's not as though they're not doing well. So everyone says, okay, economy's bottoming out, but we're not quite sure. So we'll stick to the leaders in the sector because they're continuing to take market share. And once the economy, you can see signs of it picking up, then we'll start to look at kind of mid-cap and small-cap.
So the last 1.5 months, Andrew, we've seen some bit of a pickup in the non-leading names as well, those top 10 names. Do you think that is just a bit of a reversion to mean, but the larger money will still flow to the ones which have been performing for the calendar year thus far?
Yeah, I think so. So let's again talk about the flows into India. If we get that weightage from emerging market flows, and it's going to go into your top companies, right? Your top market cap companies. So it's still going to be drag up the top 10 stocks. But I don't think there's going to be high conviction on mid and small cap yet until the economy starts to grow, because they're all operationally geared to a domestic-driven economy.
This is actually pretty similar to what you're saying is in 2018, the money that came in, a bulk of it that went to the mid caps and small caps from the FII side, that is completely reversed now. And any incremental money that's coming in is just moving into the larger names, with the mid caps and small caps being left out. But my point being is, when we're talking about these quality names and these mid caps and large caps, the last 10-year CAGR growth rate for them has been somewhere closer to 10% or maybe even sub for some of these names. So then attracting valuations of 60 times and still going, is that justified?
So let's take Unilever, for example, right? So I met with them the other day. Now, obviously, they've got the GSK merger to come through, and that will be the first quarter. Now they're ready. They're ready to, get all the synergies that will start to come up front for them, and then they've got the pharmacy kind of trade they can go into in terms of their products. So this is a great uplift for their top line, and that falls straight down to the bottom line. So you're going to get growth from Unilever over the next 5-10 years, which where habits dips over in some years, but we're not going away from the consumption story. So Unilever will actually do very well. So despite the 60 PE, would I buy it? Of course.
All right. Now, before we move any further, let's find out what's made it to Sharad Dubey's list of the Fab 4 stocks of the day. Johnson right now with that. Sharad. Good afternoon.
Good afternoon, Neeraj. The first stock is DCM Shriram. The stock is up more than 6%. It's one of the top gainers of the Nifty 500 index. So basically, it is also highest in a month after the company announced that it has commissioned almost 200 kiloliters per day distillery in the state of Uttar Pradesh. Now the total distillery capacity has gone up to almost 350 kiloliters per day. Up next is Gayathri Projects, which was up almost 4%, which is up almost 0.5% right now after the company has offered to sell 6% stake in Sebcom Energy to its Sebcom's arm for 406 crore rupees. So both parties have actually tied binding term agreements. Up next is Tata Elxsi, which is up almost 6% after fresh longs were seen with a high open interest of 50% and volumes trading at almost 7 times its 20-day average. And the last stock of the day is Polycab, which is up almost 5% after the stock reached its all-time high levels today itself, and it has been also gaining for the past 5 trading sessions by more than almost 14%. Back to you.
Yeah, thanks a lot for that, Sharath. So those are some names that we've discussed with our guests as well. Let's wait and watch how they shape up. The stock that's now the top loser today on the Nifty is Bharti Airtel, 448 or 449. Do watch out for this one. Gurmeet, would you be comfortable buying a Bharti at the current valuations from a slightly long-term perspective?
Yes, Neeraj. I think there are a host of positive factors which will play out. I think fundraising, while we'll see how it sees the light at the end of the day, there could be some DOT approvals also, because the kind of fundraising would also mean exceeding the FDI limits which we have. So I think we'll have to wait for that. I think if you go by, my view is this will eventually be a duopoly with 2 players, with Jio and Airtel. Airtel has defended market share much better than Voda Idea. I really don't see BSNL really having any meaningful play in the sector. Obviously the top bet is Jio, and that's why the Reliance share has gone up the way it has. But I think Bharti, even at despite the run up of almost $100 since the time that moratorium came in, I think it still offers a very interesting. The valuations are still very reasonable, and if you can build in a 20% kind of an ARPU growth, which can make it go up from 120 to, let's say, about $150, it would lead to significant jump in earnings. The overhang would be the payment which they have to do in light of the court judgment. So you could have, I don't know which route they will take, whether they will use the entire fundraising to pay it off at one go, or I think that will probably be a near term, have a weightage on how the stock does. But if you were to take a slightly longer view, I think it offers you a good play. I think one should have both Reliance and Airtel in the portfolio, because Reliance gives you a much bigger play of retail, e-commerce, and that merger of content and communication. And Airtel probably gives you a pure, let's say, telecom, data and communications.
Okay, Z is now sub 300. I mean, it's moved up today though, but it's still sub 300. Just about nudging those levels, 6.5% higher for Z, so it's a good move in today's session. Last 1 month though, stock's up only 4%. In the last 7 days, it's still under by about 6%. What do we do with Z, Gurmeet?
Yeah, I would still say wait for some time. I think whenever you see institutional ownership go up, there will be a bit of a cleanup. What you have seen is probably the first leg of it. I have no issues with the underlying business. I think that business remains good, and that's the reason, despite all the negatives, they've still managed to pull off and get financial investors on board. But if you see the trade receivables, out of that, 7 billion is towards Dish TV and City Cable. Obviously, 3 billion is overdue. It doesn't give you a great message. There have been concerns on CSR spends, So my sense is this cleanup and phase could last a quarter. And then, once it gets over, the underlying business is far more valued than what the price is reflecting right now. The subscription revenues have been growing. The advertisement revenues have been flat for, right reason. The economic activity itself has been flat. There is consolidation happening in the media space. My view is that some stronger hand will come in at some point of time. It's a little speculative right now to say whether Sony would come or some other would come, but I think one stronger hand would come in at some point of time. At what price, at what time, I think that remains to be seen. Their OTT platform is doing pretty well. I was seeing the September daily average users data. That was some 8.6 million, which is a very high number. And at a 60% conversion rate, if DAUs translate to MAUs, which is monthly active users, it augurs very well. I think it's competing in that space, which is not easy to compete with the likes of Amazon, Netflix, and others. So I think all business verticals seems to be doing well. The regional channels are doing well. So it's a good business, but once you have a governance overhang, it's difficult to give a near-term view. So let the cleanup happen. Even if after later, if you will enter 10-20% higher, it doesn't make any difference, because then the price now you can be in it for a slightly longer period of play. Mind you, the stock used to be at 550, 600 levels just about a year back, till the time these promoter debt and pledge issues came to light.
Yeah, point well taken, and the current valuations are way below the average historical valuations that we've seen for Z. Gurmeet, we leave it on that note. Appreciate you joining us today and taking us through your thoughts on the markets and some of the individual stocks. But pull up Equitas. There is huge buying that is coming in that stock, and looks like a catch-up game after Ujjivan has surged. Remember, Ujjivan went up 4 to 4.5% in yesterday's trade, and of course, Equitas too will be listing its small finance bank, and their deadline is, they've stated, by March 2020 they will be going ahead with it. This is the cash segment. Pull up the futures as well. There are long positions being built up there for Equitas holdings. Open interest has risen by, I think, about 23% right now. Amar Singh, the sort of activity that we are witnessing on Equitas holdings from current levels, do you think it's poised to go up further?
Yeah, looking at Equitas, what we see here is that the stock on the short term as well as the intermediate term trend definitely is positive, and there was some consolidation around 102 odd levels, so that has been taken out, and however, looking on the monthly charts, we see some sort of very stiff resistance coming around the current levels. So effectively meaning that 111, 112, 13, that would be a key resistance zone for the stock, and the stock could witness some profit booking along those levels. If that 112, 113 is taken out, yes, then the stock has a potential to rally towards 118, 120 levels, and the stock now seems to have formed very strong base around 100, 102 zone.
Okay, that's Equitas looking good on charts. It's sitting at days low, but if you look at the Nifty constituents, since last 2 to 3 sessions, we've seen participation coming back from the heavyweight IT stocks. So TCS is now one of the top gainers in Nifty. It's up over 2% around levels of 2120, and we are also seeing some buying coming in for Infosys, and that's the contribution chart there on your screen. TCS contributing the maximum right now of about 11 to 12 points. Arun, between TCS and Infosys, if I were to ask you pick one on basis of technicals, which one would that be?
I would prefer TCS. Setup is much better, and it is also one, the MACD is almost close to coming into a buy zone. It is trading above its key averages, and the volumes are also fairly decent. And this has got a better scope to rally. Probably this can rally towards 2,100 to 180 to 2,200 zone very quickly. So this looks much better compared to Infosys.
Okay, TCS looking better than Infosys. The other stock which has gone up is Apollo Tyres. Pull up that one as well. It's sitting at days high. The stock's up about 2 to 2.5% right now. There you go. 173 is the 173.6 to be precise. Amar, on the charts with the gains that we've seen in the last 10-15 minutes on Apollo Tyres, does it warrant a trade on the upside?
Yeah, looking at Apollo Tyres, yes, I would say that it has the potential to rally, because if we look at it from a short term as well as the intermediate term trend, we've seen that earlier also it had made a high of 173.50, and from there it had corrected all the way towards 164 odd levels. So today that 173, 173.50 has been taken out. So sustaining above this, the stock has an immediate target of 184.85 on the upside.
We'll watch out for those names as well. Actually, the other conundrum that has happened in the banking space is, while what ICICI Bank has done, what it has done, Axis hasn't. Now, yesterday we spoke about this, that one of the reasons could arguably be that Axis Bank faces this overhang of the Suti stake sale, and if that were to happen, that would come at a price and the supply that it gets in, therefore that overhang remains. Look at the 1 month or a 3 month performance of ICICI Bank vis-a-vis Axis Bank, and you will see what I'm talking about. 3 months, Axis Bank has gained only about 12%. ICICI Bank is northwards of 30%, 36% to be precise, and still going strong today as well. So clearly there is some preference for ICICI Bank over Axis Bank fundamentally. Now the question is, from a trade momentum perspective or a trading perspective, what is a better bet? And Amar, that would be my question to you. ICICI Bank has done its bit. Can it do more? Or Axis Bank looks good enough for a bargain purchase compared to ICICI Bank?
Yeah, first talking about ICICI Bank continues to be extremely strong on the long-term charts, intermediate-term trend. Daily, yes, it has been losing some sort of momentum, but in spite of that, few sideways trading, again, it's gone up. But I wouldn't recommend an ICICI Bank at the current levels. Looking at Axis Bank is definitely not to be touched at current levels, because the monthly charts are extremely, I would say, they are range bound. So clearly shows that Axis Bank is in a range 750, 760 on the upside, and somewhere around 710, 720 on the downside. So it's completely a range play for Axis Bank. So till the time we don't see a breakout of either side, I would say Axis Bank is into a very narrow range.
Okay, that's Axis Bank for you. It's also time now to get in a check on what dealing rooms are recommending this afternoon. Darshan Mehta is here with his channel checks. Darshan, good afternoon.
Yeah, so good afternoon, Devina. One of the stocks that's been spoken about and one of the top losers, at least on the F&O side, is Interglobe Aviation. Obviously, news came in the evening yesterday that they have cut the guidance as far as capacity is concerned the second time in the past 45 days. So there is definitely selling pressure that's happening from some of the funds. Some of the dealers also indicated that funds are shifting from Indigo to SpiceJet at this point of time, given the fact that there is issues at Indigo, and also in terms of the promoter feud not helping the company. So Indigo, for one, is something that's seeing selling. IGL has corrected today. It's down almost 2%. There's a buzz of a potential offer for sale that could come in at a discount, and that's why ahead of this there is a little bit of selling that's happening on the counter. And Tata Elxsi is one of the top gainers today. It's up almost 7%. There is a buzz of a corporate announcement that could come in on the counter. We're not sure of what this could be, but yes, on very high volumes today, 7% upside on the counter.
Okay, Darshan, thanks very much for that. Amar Singh, any of these stocks, MGL, IGL, that are good for a trade?
Yeah, looking at MGL, I would say that one should avoid, because the upside seems to be capped at the moment. It's not able to consistently sustain above 1050 odd levels, because trading above that level is required. But otherwise, if you look at technically on the intermediate and the long-term trend, it remains positive. And as far as IGL is concerned, IGL again has a similar pattern, but IGL is slightly weaker on the daily chart. So either of the two, MGL would be a better option. But again, till the time we don't see a breach above the 1050 mark for that.
All right. That is some of these gas companies. Adani Ports is the other one. 369 is where it's at. I just want to also look at what Adani Transmission, Adani Green Energy are doing. Because off late these stocks have been in focus, and you've seen a lot of interest building up. Volumes 1.68 million on Adani Green, up 1%. Adani Transmission, for one, is seeing some profit taking after the stupendous run-up that the stock has seen in the recent past. Arun, do you track any of these two?
Adani Transmission, yes, I am tracking it, but in terms of setup, it is much better. And if you look at slightly one and a half or 2 year picture, it is just moving out of a long-term consolidation zone. So definitely it has got more room to go up, probably easily at least another 30-40% appreciation we can see even from current levels. If you look at the monthly chart, if you take the MACD on monthly chart, it's a buy. The volumes are also fairly good. During the period of consolidation, the volumes had dipped down, and now post-consolidation, the volumes are picking up. So it definitely makes case for being long on Adani Transmission.
Okay, that's about the Adani Group companies. Pull up the Nifty Metals Index. It's down 2% in trade, and you've got both ferrous as well as non-ferrous players which are seeing selling pressure. It could also be a bout of profit booking. Remember, all these, at least the metal stocks had outperformed in the month of November. JSPL is down 5%. NMDC is also seeing cuts of 3%. And you've got the likes of Coal India, Tata Steel. All of them are sitting almost at day's low. Amar, out of all these metal companies, would you initiate a short position?
Yeah, if you look at Tata Steel continues to be extremely weak on the long-term charts. And it has corrected, I would say, from the highs 434, currently it's around trading around 400 odd levels. So any pullback in this stock can be used as a shorting opportunity. On the downside, however, it has got good support coming around 380, 385 levels. But yes, the long-term trend is definitely weak for most of the metal stocks.
It'll be interesting to see what happens though if indeed what Andrew Holland was talking about in the morning turns out to be true. We may not have a trade deal, but if we have a tariff deal and that is viewed positively by the markets, would
and some guidelines to a trade deal.
And some guidelines to a trade deal, maybe post-elections or otherwise, would it mean that metal stocks rejoice this? Because yesterday, Devina, frankly, the metals moved up simply because of the one statement on Bloomberg that there is some bit of possibility of a trade deal or some deal that US and China may reach. And if that indeed happens, then this very volatile pack, which has been volatile the last 1 month as well, might actually see some bit of buying because valuations are clearly in the favor of the metal companies.
One is valuation, but particularly for steel companies, there are some signs of revival. We've seen steel companies globally, be it ArcelorMittal or US Steel. Back home also, we've heard how steel companies have now started to increase prices, which have been subdued because the LME prices were crashing for the last 1 year. So whether that cycle also turns, and of course the trade or tariff deal will be a booster for all of them. And of course, valuations being one, they are trading at lower valuations.
China rebar prices also have started to increase, so that probably gets its cues from there. But nonetheless, again, it's all the big eye obviously stands to be with China. That's the bulk producer. I think most companies, whether you take India or any other manufacturing country, looks for cues to China in terms of pricing and production and how things are shaping up out there. So unless and until there is no big meaningful turnaround, which again points towards some kind of clarity with regards to the trade talks, I don't know how much further any of this can go.
Yeah, I mean, the big elephant in the room is that. So if that works, great. If it doesn't work, then you have an issue. But let's see if that works or no. By the way, as we speak, the Nifty Bank is closing in at the lowest point of the day. It's a good time to take in some closing strategies. I'll come to you first, Arun. Your top closing call for the session today.
I like Bata. The stock is trading around 1,708. It's a buy on daily MACD. Today we are getting a buy signal. The volumes are also increasing. And further, it is trading around its 50 DMA on the verge of closing above this, closing or very close to it. So we do expect this stock to move up probably initially to its recent life high of 1,815 and subsequently rally towards 1,860. This is one stock which you like. One has to keep a stop loss around 1,670 for this particular trade.
Okay, what about you, Amar?
See, one can look at Apollo Hospitals because this is one stock which after a consolidation on the daily charts has displayed strong movement for the last 2 days, and also looking at the monthly charts clearly shows that there could be more upside to the stock. Weeklies also we are seeing that moving out from the oversold territory. So this is one stock currently is around 1485. Ideally one can buy around the current levels with the stop loss below 1450 and a target of 1540 on the upside.
Yeah, I think as we speak, you've got the sugar companies which have seen some spikes. So Balrampur Chini, you've got Awadh Sugar, which has gone up in trade, and also Dhampur. I think that's up 8% right now. So just in the last half an hour of trade, I think there is some buying momentum which has come in. And remember, we were yesterday speaking how the guidance with regard to production for this sugar year, they've said that it will be on the lower side, which will drive up the prices as well. And last 2 years, there's been overproduction. A lot of these companies have been rolling over their inventories. Amar, looking at the trading action, but on the technical side, on the charts, would you buy any of these companies, Dhampur, Awadh or Balrampur?
Yeah, looking at Dhampur Sugar, what we see here is that after a very strong consolidation, almost for 8 to 10 trading sessions, it has been a sharp up move. So there is a possibility that we could see a further upside in Dhampur. However, looking at the weekly charts, somewhere or the other, it has got stiff resistance coming around 195, 200 odd levels. So that could be a level where one can look at booking profits.
Okay, that's about the sugar companies, but we've already discussed what's not doing well. Of course, after rising 7% yesterday, Tata Motors is sitting with cuts of about 2% today, and Let's take a technical check on Indigo. Darshan also highlighted in his dealing room check. The stock's almost a day's low after they cut the growth guidance for this financial year. And remember, in the last 45 days, they've done it twice. They did it post the Q2 numbers from 30 to 25%, and now it's 22 to 23%. Arun, on the charts, with 6% fall today, and it's been trading below all its simple moving averages, do you think it's poised for further downside? And if somebody is holding short positions here, what would your advice be? Book profits or rollover?
The setup is turning pretty bad for Indigo. It is trading below its 200 DMA. It is on the verge of testing its medium-term swing low of 1,275. And looking at the first leg of fall, subsequent consolidation and fall, this has got scope to fall almost towards 1,125. So if somebody is short, it's better they roll over the position.
I wonder if JSPL has had any kind of move in the last few minutes of trade. I think social media is agog with some news flow around how the bid for the coal mine not yet approved by the coal ministry. Gayathri Projects' name not on the list, so I think maybe that is one reason why the stock is doing what it is doing.
Both the positive news on the back of which the stock
JSPL
had actually
shot up.
run up have now
We don't know about the second one though, but could well be the case. So it'll be important to monitor this. But
It would be a big negative if they don't get the Gayathri Projects coal block. And remember the proximity of that mine to their plant, and that was a major reason why the street was highlighting if they win that block, the cost of sourcing that coal will go down drastically, as per the brokerage's note also highlighting. And the stock's only seeing selling pressure. It's down about 10 to 11%. Remember the other case with regard to iron ore, which is lying at Sarda mine, that case has also been postponed now. That will be heard, I think, in January 2020, due to which there was some selling pressure seen in the last few days. And this is clear case. I think the stock was only moving higher because of these two news pieces. Yeah, so we don't have that piece of news as well, but there is some bit of news flow in the media about how government has released the names of some of the mines, and Gayathri Projects doesn't feature there. So that's the crux of the matter, that the two legs on which JSPL rally had happened from nearly 125 odd levels all the way to 150, 155. Both of those are coming off, and which is why this move today is pretty sharp. I think the volumes too have surged, and I would reckon there would be some fresh shorting that would be done by trigger-happy traders as well. But fundamentally, this is a piece of negative news for the time being. Now, maybe JSPL would say that we'll hopefully get the mine soon, but let's wait and watch. Any trade possible out here, Amar?
Yeah, looking at JSPL, I would say that yes, there is further selling pressure in the stock. However, the stock has got a very strong support coming around 135 odd levels. So ideally, at the current levels, one wouldn't recommend shorting. But if it sustains below 135, then it has a potential to correct towards 120 odd levels.
Okay. Anything else that catches your eye, Amar, in the last few minutes of trade?
Yeah, I would say that Sun Pharma, which I mentioned, that's one stock one can definitely look at, because it seems to be forming a base and sustaining above 435, 440 levels. It has potential to rally in the short term.
Okay, that's Sun Pharma. And remember, we were also talking about Max Financial. That's touched 52-week high, fresh 52-week high, because the stock's been doing well in the recent past. And currently, Max Financial is at levels of 530 to 532. Very quickly, Arun, then, on the chart, it's at 52-week high. What would you advise someone to do with Max Financial?
Hold, just hold. Any stock which is at 52-week high, and Nifty is also very close to its 52-week high. The trend is good, so one has to hold this stock.
All right, gentlemen, stay on with us. Quickly start wrapping up the markets for you. This is how we're going to stack up in terms of the close on the indices. Sensex is going to close with 0.33% cut, and so is the case with the Nifty, but probable silver lining to that, above 12,000 for the day. Nifty Bank saw a late afternoon downtick and a sell-off coming in all the major names there, dragging the Nifty Bank lower by a full percent. So 320 points lower. It had digested the status quo of the MPC, but then post that, a lot of selling pressure bringing the index lower. Coming to the mid-cap and the small-cap space, absolutely flat on the small-cap index, with the mid-caps losing just 1/3%. Individual stocks then, and what's done well in today's session on the index, it's Z. Z is closing the day almost with 6% gains. Following that are some of the defensive names from the IT pack. All of the IT big names are up in the green. So you've got TCS, and then you've got Infosys, Tech Mahindra, Wipro, all stacking up amongst the top gainers. L&T comes back in today's session, 1300. Closer to those levels is where you've got L&T trading at. Britannia is up about 1% as well. What's losing is JSW Steel, 3.5% lower. Coal India, Bharti Airtel, Tata Steel. Then you've got an IndusInd Bank, Grasim, and BPCL along with the Tata Motors that loses steam today. Navneet, while the benchmark index is also seen some bit of a decline towards the last half an hour of trade, I believe the mid caps would have also worsened a bit.
The Nifty has definitely defended the mark of 12,000, which we were watching out for. The mid-cap index is closing with cuts of nearly 0.2%. Some minor gains definitely seen for small-cap index, but there were a lot of movers. So let's begin with individual stocks. Tata Elxsi, in the stock that we've been discussing, how there is buying interest that's coming. There's cash-based buying in this counter. Volumes were higher today. On the future side, significant open interest build-up was seen on the long side. 7% higher for Tata Elxsi. Equitas has had a good run, maybe rub-off effect seen after gains and the sort of response Ujjivan Small Finance Bank got. So 7% higher at day's high, not bad for this one. Muthoot Finance, the gold financing companies, I think throughout the session, be it Muthoot or Manappuram, are having a positive close. So for Muthoot particularly, 3.5% higher. Apollo Tyres, we mentioned last half an hour or 45 minutes, there was some buying interest seen, and this one's closing with gains of 2%. Sugar stocks rallied in last half an hour of trade. So something like Dhampur Sugar and Awadh Sugar saw gains of between 8.5% to 9%. Awadh is also closing with gains of 7%. And Dish TV, this has been rallying. Yesterday it was up 16 to 17%, and today also we did see some meager gains, however, of 2%. On the losing side, Indigo falling 6% after cutting guidance for the second time in last 45 days, not going down well. Fresh shots also seen on the future side. Profit booking seen for HDFC AMC, that stock was down nearly 4 to 5%. Godrej Consumer has been weak in last 3 sessions, and so far for this week the stock's fallen about 6%. NMDC and Jindal Steel and Power were the other metal companies which fell in trade, while NMDC was down 3%. JSPL, we will verify the news, but major selling pressure came in the last 15 to 20 minutes. Concerns around the Gare Palma block, the coal block, whether that will be allocated to JSPL or not.
All right, so there you have it. So while the day started off, flat to slightly positive, towards the end of the session, we're losing ground. On the index, though, we've maintained 12,000. We're slightly above that, so that's probably the only silver lining for today. Nifty Bank loses almost 1%, so almost 300 points given up by the Nifty Bank. And then we'll get you individual contributors on the Nifty, but I also want to take a look at the individual contributors of the Nifty Bank once we get done with this. So TCS, which contributed 10 odd points. It was the defensives that took center stage today. IT as a pocket did really well. ITC contributed 8 odd points. On the losing end, you had all the banks, like HDFC Bank taking the chunk of the pain in today's session. I think if you grid the MRR function of the Nifty Bank, this is what you've got. Everything is in the red, right from a Kotak Mahindra Bank up until IDFC First Bank, which lost about 2.7%.
All right, so that's about Nifty and Bank Nifty constituents. Let's check the market breadth also for the entire listed universe, and I guess it was in favor of the declines. As you can see, there was heightened selling pressure, maybe which came in the last half an hour to 45 minutes of trade, but also volatility continued to be on the higher side. Of course, we were going into an event with regard to monetary policy, but after that, I think in the last half an hour, that also corrected. So good going, at least if the markets were to scale higher. 13 is a very good level for India VIX.
All right, and lastly, I think just the turnover that would be on the higher end, at least on the F&O side because of the expiry. 30 lakh, almost 31 lakh crore on the NSE F&O. Cash markets a bit more subdued, about 33,000 odd crores. Last closing comments from our technical experts. Amar Singh, I'll start off with you. What is it that you're going to be watching out for trade come tomorrow?
Yeah, I would say that Nifty has managed to close over. Nifty futures has managed to close over 12,000 odd levels, but what we're seeing is that 12,100 on the upside and 11,950, 960 on the downside. So that's going to be the range. And looking at on daily charts, clearly there is bearish divergence on the daily chart. So effectively, Nifty would find it difficult to sustain at higher levels. So it could be some consolidation again, which you could witness, and higher levels could be sold into as well.
Arun, what about you?
I agree with Amar. In fact, the index is moving into a consolidation zone. And if I have to look for opportunities, I'll be looking at two stocks. One is ITC and the second one is L&T. Probably during this consolidation, these stocks can rally, while a couple of stocks, banking stocks, may come under pressure. Like Axis Bank is looking weak, so it could come under pressure tomorrow.
Okay. Watch out for all of those names then. Arun as well as Amar, thank you very much for joining us this afternoon here on Countdown with your thoughts. And on that note, it's a wrap on Countdown as well. Thanks a lot for watching. From Neeraj, Navneet, myself and the entire team that's put the show together. See you tomorrow.